Hi, good morning, everybody. First of all, I'd like to thank Elva Loera for inviting me. Um, I am not going to say my company because I know you have your preferred vendors, but I am just grateful that you invited me to your meeting. And
Veronica, if I can interrupt you, you're welcome to give us your pitch.
Okay.
Anybody that provides programs to us gets their 15 seconds of fame here, you know?
Okay, so Veronica Franco, I am with Provident Title. And what can I say? I work for just the best title company. We have the best title officers. We also work around the clock to close your deals. We have great resources. And in fact, one of them is going to be presenting today. I have a lot of educational Zoominars, I guess you can call them. So today I wanted to share one of them that is very popular. I'm actually having the speaker every month. So if you would like to be added to my list, what I'll do is I'll go ahead and add my email address on the chat box because I do have lots of different educational classes every month. But let me introduce our amazing speaker for today. And thank you, Derp and Danny, for inviting me. So Nora Guerra is the Affordable Lending Manager in the Affordable Lending and Access to Credit in the Single Family Organization. The Affordable Lending team is committed to ensuring Freddie Mac has the offerings to support responsible lending and provide sustainable home ownership, and to improve access to credit for all borrowers. Ms. Guerra supports the sales and lending partners to develop and execute seller plans for meeting affordable lending community outreach and CRA goals. She analyzes market data to identify trends, opportunities, and develops strategic direction for market information. A veteran of 21 years in the mortgage industry, Ms. Guerra joined Freddie Mac in 2019 and has held positions of leadership in sales origination, production, and sourcing areas in a variety of areas, including multicultural and low income to moderate income segments. Please help me welcome the dynamic Nora Guerra with Freddie Mac.
Veronica, thank you so much. And, you know, it's such a great opportunity to be able to be in front of realtors. Typically, just so you know, as Veronica introduced me, I'm an affordable lending manager for Freddie Mac. I reside here in Southern California, but I'm back in Washington, D.C. I report straight to our headquarters and very excited. Typically, I am traveling the country 12 months a year, speaking to senior leadership of all big banks, lenders, brokers, policymakers. So very excited to be able to talk to a great demographic of agents in my Southern California. Let's see here. So again, affordable lending manager. So what I do is I work closely with our senior chief economist, our data analyst, and really I look at market trends. You know, what are opportunities for us at Freddie Mac to create loan programs, you know, to be able to educate, you know, on, you know, kind of the demographics. So today we're going to be talking about economy and the borrower of the future, which are two hot topics. Today's economy is not a regular conversation in regards to what our senior chief economist and I usually present on. It's COVID's impact on our economy. And then we're going to talk a little bit about its impact in our housing. So of course, you know, as we've seen statistically, COVID is impacting lower house income households more severely. So, you know, in regards to this, what we've done at Freddie Mac is taken a dive into, you know, statistics and income and really taken just that look of who is this really impacting. And what we discovered is a lot of middle America is truly living on, you know, 1 to 3 months of reserves. And that's really impactful if you think about it. You know, as we're seeing this, you know, we are really sitting tight and just, you know, doing a market watch, you know, on our economy. Our housing industry is such a huge impact of GDP. So something very important to note. You know, this is such a phenomenal topic, and I've been talking about this a lot lately. You know, social distancing and remote work is creating a new house demand. And what I want to point out to you is we are seeing a lot of our urban house MLSs, if you will, and we're seeing a lot of migrations out into suburbia, out actually even some rural areas. When we're looking at our statistics in regards to forbearance, or, you know, where people are actually, when they were sheltering in place, what we discovered is a lot of homeowners were actually staying in their second homes or their empty investment properties to be able to be out of suburbia, specifically because of that remote work environment. We're also seeing a lot of renters are actually realizing, you know, if this is going to continue for, you know, a next 6 months or 7 months, we have been on the fence and have not actually purchased or thought of purchasing, but it's the perfect time for me to buy. And we'll talk about why it's the perfect time. I love the intro from Durf, you know, and he's spot on. Interest rates are historically low. And I have a really great slide to talk to you about that. So of course, you know, anyone who is sitting on the fence is now really actively getting pre-qualified and looking to home ownership. So that's really important. Let's talk about the economy and housing market. So as we've seen, economic growth contracted by over 30% in our first quarter of 2020. And of course, you know, we saw a huge impact, specifically in March. We have now seen definitely a bit of an increase in our third quarter. And, you know, our economists were actually projecting a V type of a recession and an economic impact. And now we're seeing we're out of that, you know, down slope, and it turned more into a U. So, you know, definitely on the mend, you know, and while we don't have, you know, a end date to this pandemic, we're still specifically looking at what GDP looks like, you know, and we're very vested in this, especially in the housing industry as it relates to our economy and our interest rates. So unemployment rate at 10%, and will probably remain a little higher than 10% nationally, you know, for the remainder of the year, as we're seeing some states opened early, and we saw, you know, a true impact of the pandemic on those specific states. And so they kind of reverted back to a somewhat shelter. And some of these small business owners that opened, you know, their offices or their employment back had to contract. So we're seeing still some high levels of unemployment. And, you know, statistically speaking, this is the highest unemployment has ever been in the history of our economy. Mortgage rates are near historical lows. And, you know, specifically at Freddie Mac, we monitor this so closely. And as we saw our feds come in and really put a lot of money into our economy, you know, it impacted our interest rates. And as Durf mentioned, yes, we all completely agree across the platform, we have historical low interest rates. And something to note, in 2009, you know, we had such an inflated economy, specifically here in Southern California. And the first thing that happened was appraisal values, you know, dropped and interest rates went up. So, you know, this is completely different from 2009. And, you know, in the middle of a pandemic, we saw 3 historic low interest rates in April, and another 2 in July. So that's really important for you to share that story with your future home buyers or anyone who's sitting on the market saying, you know, I'm not sure if this is the right time to buy. It's actually the best time to buy, because some of those buyers may not qualify if these interest rates ever do go up. So this is a perfect time to buy. I love this slide. You know, in 2020, one of our senior chief economists had projected 2020 to be to see originations about $2.4 trillion. So we were very excited, you know, 11, 12 years out of our mortgage crisis. And we continue to say, you know, we're doing fantastic in the housing industry. We've you learned a lot from 2009's market crash. But another interesting fact of the pandemic versus the crisis is that we are now projecting upwards tick of $3 trillion in homeowner originations. So again, you know, when you have those buyers that are sitting on the fence saying, you know, I don't think it's a great time to buy during the pandemic, you know, please relay the message. You know, you guys are on the front line. We are your secondary partners, and we get to relay this message. There's so many people that are taking advantage of the interest rates and are really understanding, you know, that it truly is the time to buy. Another point that I want to make is, so coming from a very urban, you know, LA city or just somewhere, you know, where it's very urban, those sales prices may not be affordable, but if they use a low interest rate and an affordable program, then they may be able to qualify, you know, purchasing a home outside of suburbia. So that's a really great tactic, specifically when you're speaking to future home buyers. Inventory, my gosh, you guys, this is a conversation I have. I want to say I hear about this almost every single day. Specifically, you know, when we talk to amongst ourselves, you know, when we talk to NAR, when we talk to CAR, when we speak to Fannie and FHA, you know, we are lacking inventory nationally. This is a national pandemic within our housing industry. I believe yesterday on a call, I was hearing that we are deficient and I'm almost positive on this number, was 3 million homes being built per year for the next 15 years. And if we think of that, you know, why are we under such a deficit? Well, we have a huge inventory of our borrower of the future, we'll talk about in a quick second. And we're seeing such a huge age demographic that is ready to buy. So, you know, if you're wondering, what does my future borrower look like? Or where can I find my next client? You know, I'm going to help you determine what that customer looks like, their challenges, some solutions, and really the demographic of how to identify and how to help, you know, future home buyers come to the table much sooner rather than later, specifically during the pandemic. So home price growth projected to decelerate in 2020 and 2021. You know, I think if you see all of the economists that I share here, and we're all great friends, you know, we're all pretty much on the mark. We completely agree. You know, we may see a tad of a deceleration on the home price growth, but it's actually very stable. So another very important note, you know, difference between 2009 and this pandemic is we have a very stable housing economy. Housing supply. So of course, we're talking about stale inventory. So if you notice from 1982 to 1992, for those 10 years, we had the largest builder growth of inventory in America. Specifically, and I love this statistic, Southern California, I believe we had over 700,000 homes built within that time frame per year. And that's really what has carried us on, you know, while we've had no inventory. Housing supply challenges vary across the nation, but if you notice, we're in California, and that red is really, you know, just it's a deficient deficient territory in inventory. And we are taking notice. We have really great conversations. We share all of our statistics with local policymakers, and stay tuned, because we're actually working on some pretty amazing stuff at Freddie Mac to overcome the inventory challenges. But one of them that I absolutely can share is that there is a renovation program that we have at Freddie Mac, and it's called Choice Renovation. And what we do is we sell the fact that a homeowner can find a house that is not in the best shape, but is in the right neighborhood. And we can finance the future sales price or the future appraisal value of what that renovation is going to look like, and partner them up with a great contractor and escrow company that can help them, you know, through the entire process. So, you know, stay tuned. We truly are working in tandem with Fannie Mae to get some products out there that can help this inventory issue. housing demand. So I'm going to be talking about what the borrower of the future looks like, but let's take a look at this. So if you're not familiar right now with future age demographics of your future borrowers, get familiar. We keep having this conversation about millennials, and a statistic, a very interesting statistic is that we were too late to educate millennials on homeownership. Couple of factors there though. Millennials actually saw their parents in 2009 lose their homes, go through a modification, and really they were jaded into this home ownership. So the conversation kind of stopped as soon as they started entering, university or the workforce. However, they have actually, I think as an industry, we've done a phenomenal job of educating them that, number one, those loan programs do not exist. And of course, the benefit of generational wealth, building generational wealth through home ownership in America is extremely important. And, if we dissect the minority sectors through these age demographic, it's actually even more important culturally to own a home and build a family. So let's take a quick peek. If you look at these green graphs, so those are my millennials. Now, millennials that are 28 to 30 are absolutely mortgage ready. What is a mortgage ready buyer? So mortgage ready has been identified by us as the GSEs as having a FICO score above 680, has no adverse credit issues, and makes income within the national average to qualify for a home. So we'll talk about that borrower of the future, but let's take a peek at our Gen Zers. So an interesting fact, the millennial age demographic is twice as large as baby boomers. So we all said, wow, baby boomers, there's such a huge demographics, they are the ones who really helped our economy, and they truly did. But if you look at millennials, there are twice as many millennials as baby boomers. However, there are 3 times as many Gen Zers as baby boomers. So your borrower of the future, number one, is a huge age demographic, and it looks different from every single borrower we've had in the past. And I say this as a past originator, as a past underwriter, as a past regional sales officer. So really, I have a lot of experience of what these customers in front of my desk used to look like. Now, let's look at this. Minority homeowner households are projected to be the highest rate than non-minorities. And why is that? Well, interestingly enough, these age demographics are coming in minority sectors. So they look millennial, they look Gen Z, and they look minority. Now, they come with their own challenges, and we'll talk about that in a minute. And by the way, I'm going to share this presentation with you if you'd like to share it with your customers, because I think sometimes, seeing these statistics as you're preparing for a meeting kind of get you in the right mindset of how to sell, or maybe prepare yourself for what the borrower of the future looks like. So of course, we talked really quickly, and I'll dive through this rather quick. Household formations. I said earlier in one of my slides, in 2020, we are all under the impression we're doing phenomenal. Our projections for 2020 were $2.4 trillion of mortgage originations, but we had actually said we are going to have 1.9 million household formations. Now, in 2019, we all as an industry agreed, the MBA, all of our economists, we are doing fantastic. We put 1.2 million families or individuals into homes. So again, even in the midst of a pandemic, our economy, our housing economy is very strong. How many millennials actually live with their parents? So this is a great statistic. When a millennial stops the conversation and says to you, no thanks, I'm not interested in purchasing a home, the first thing they say is, I live with my parents and I live rent free. Well, not necessarily, actually. During this pandemic, we have seen a lot of millennials stop renting and go back home. but they're very interested in purchasing. There's a Harvard study that I recently was a part of, and a lot of these millennials are saying, I can't wait for the pandemic to be over, I need to get out. But what they're realizing is, again, the rent price in urban is actually higher than a sales price to purchase a home in suburbia or outside suburbia. So here in Southern California, let's think Inland Empire, let's think San Bernardino, let's think the outer skirts, because a lot of people are now realizing they can work from home. Their companies are realizing they're more efficient as a remote employee. Now, for those of you that are thinking, what does my business look like in the future? Raise your hand if you would like a piece of 50 million millennial buyers in the next 15 years, because that's what we are having. We have these projections, and I think across the board, I keep hearing it's 60 million, but we'll settle on that 50 million. And let me tell you, as a past originator and full commissioned employee, when I saw that number, it looked so fascinating to me. And I thought, wow, if I was still originating, I would really immerse myself into what my future buyers are going to look like. And of course, educate myself on how I better can help them, you know, when they have objections or when there's issues, you know, that I might not understand. And we'll talk about what the millennials are really thinking when it comes to homeownership. So of course, we've now talked about the changing face of the borrower. It looks very different. Let's talk about millennials, my favorite topic. You know, I have these webinars all the time. I'm asked to speak. I'm a keynote speaker for Freddie Mac. And can I tell you, this whole last 2019, all I did was travel and present on millennials. Why? Again, I mentioned, you know, we came too late to the table as an industry to educate millennials, but they're ready to buy. I mentioned about the mortgage ready millennials, and sometimes, you know, these millennials are not aware that they're mortgage ready. They're jaded, they're scared, they need help. So one of the first things to notice, they know there's a benefit to homeownership. That's number one. We were very, you know, kind of like in that millennial conversation as industry professionals, we would say, you know, millennials are not really interested in buying. That's actually incorrect. And again, that Harvard millennial study was, number one, they're very interested. They understand homeownership benefits. They are wanting to build generational wealth. Yes, a lot of those young millennials were very interested in the experience, you know, of not being tied down to a home, but now they've realized, you know, we are in America and we are built on this generational wealth. So in order for them to experience more trips or more activities, they may need to own a home and use some of that generational wealth to experience more of these trips. So that's very interesting. 85% considered a home purchase a good financial investment. So if you get that millennial that says, no thanks, not interested, these are some interesting statistics to share with them. A lot of these millennials are using the internet to look for homes, but they are not interested in applying for a home or using the internet for their realtor. I had a great conversation during one of our studies with some millennials, and the first thing they said is, if I don't know what I'm talking about or what I'm doing in regards to homeownership, why would I go to the internet? I can't ask it questions, and it's not going to respond back to me on every particular question I have. So what we've discovered is they are really looking to the mortgage professionals to complete the purchase as a realtor and to complete the purchase as a lender, you know, real estate professional. So that's really interesting. And another interesting fact, 98% of all millennials who purchased a home last year used financing. So they're not all cash buyers. They're going to need your help. They're going to need you to educate them. And they're very interested in building partnerships. Something a millennial said to me during one of the studies is, if someone took the time to help me through the homeownership process, I would love to refer all my friends and all my colleagues to them and know that they are a professional that is willing to help. So keep that in mind as you're working with some future home buyers. A lot of these demographics are actually coming to the forefront as future home buyers. The number one demographic is the Hispanic American home buyer. So in the next 5 years, they're actually going to lead as the majority, no longer the minority. And we see that a lot here in Southern California. 46.2 homeownership rate in 2017, and they actually increased an entire percentage by 2020. So that's very important. Again, borrower of the future looks young, it looks millennial, it may even look Gen Z. And of course, looks minority. Some of them may look Hispanic. What are their challenges? And one of the challenges that I have dissected is they don't have an understanding that they can purchase a home with less than 20% down. So they believe, like their parents, that they need to wait 20, 25 years to purchase a home. Now, at Freddie Mac, we have a 3% down program that can help them get into a home with a low MI option. So let's compare apples to apples. So one of my studies was how long will it take for a millennial to save for 20% down versus using an affordable product? One of the lenders just use a Freddie Mac product. 23 years for 20% down. 3.5 years in Southern California for a millennial to get into a home. And if you have a great lender, ask them to layer a down payment assistance program if the borrower qualifies. You can actually get these borrowers into a home in less than a year. How can Freddie Mac support your business with COVID-19 resources? So of course, we're very mindful of conversations that you guys are having on the front end in regards to forbearance, anything that is COVID related. So what we've done is we've created a #HelpStartsHere interactive guide for homeowners and real estate professionals. Something to note is we are monitoring social media, and so is our regulator, the FHFA, and we've discovered a lot of real estate professionals are sharing stale information. And let me tell you, that's understandable, because at Freddie Mac, I literally receive a call probably on the hour throughout the day of new COVID impact, CARES Act updates. So it's very hard for you, who's a real estate professional working a pipeline, working with customers, to get out innovative information to your communities, but we want to help. So number one, #HelpStartsHere. If you have any customers that call you in regards to forbearance or say, you know what, I don't think I can make a payment next month, this is a very awesome page. It has all the information in regards to forbearance. What should they do? What documents do they need to gather together? Who should they call? Who is their servicer? Their servicer is anybody that they make their mortgage payment to. Real estate professionals, we want to help you grow your business. So if you're not aware, Freddie Mac actually has a partnership with all the national housing associations and all the national housing resource centers. So they work with first-time home buyers, they prepare them, and they look for real estate agents within various communities across the nation, and we can actually help you grow your business. You just visit that website down at the bottom, you sign up, and you talk about what you do within your community and what territory you're at. And if there's any borrowers looking for a reliable Freddie Mac approved real estate agent, then you can be a resource and help grow your business. Again, this page actually gives you a lot of information if you want to share social media content that is very relevant and very accurate. Another suggestion is, if you'd like to, I post and published 2 to 3 articles on first-time home buyers, on real estate agents, on how to grow your business daily on my LinkedIn page. Again, my name is Nora Guerra. You can follow me, and a lot of that is coming from NAR, from CAR, a lot of really reliable resources. We have Freddie Mac help resource centers across the nation, as I mentioned. And if you have a homeowner, or if you have a first-time home buyer who's not aware of the entire purchasing, what it takes to purchase, or if they're truly on the fence, we have help centers that are actually helping us get the word out that it is a great time to buy. In 2009, we realized a lot of these homeowners and potential, borrowers that lost their homes did not understand the documents that they were signing. So what we've done is we've translated over 500 documents into plain English and 6 other languages for homeowners to understand mortgage jargon and documents that they are signing. Modification agreements, deeds of trust, notes, any document, that we deem as an important document during the home buying or refinance process. And this is a really great resource for you to share if you have a borrower who says, I don't understand what I'm signing. Legally, this is binding. It's from our partners over at the FHFA. And with that, I end my presentation and I thank you. Hopefully you got something great out of this. If you're interested in my deck, I'm going to send it over to Veronica to share with you. I'm not sure, Danny, do we have any time for Q&A?
Yeah, this is Dirk. Yeah, sure. Go ahead, raise your hand or unmute yourself, or you can use the chat at the bottom of your screen.
Okay, looks like maybe we don't. Well, again, thank you guys so much for inviting me. Pleasure to speak to you.
Nora, thank you very much. And also thanks for Veronica for introducing you to us. That was very enjoyable, very educational program there. Okay, so not hearing any questions, we are done for this Zoom meeting. Thank you very much. Happy birthday to the September birthdays. Hopefully we'll be able to share some birthday cake here in the near future. Make it a great day.
Thank you, Nora. Thank you, Durf. Thank you, Danny. Thank you, Elvita.